Hello, my name is Rhett Zaid, and this is my company analysis project on Tesla Motors. The goal of this presentation is to provide an informational overview of Tesla, as well as to analyze the financial statements of the company. I will also discuss past, present, and future events, and I will finally determine if investors should consider adding Tesla to their own portfolio. Tesla was incorporated on July 1st, 2003, originally by Martin Eberhard and Mark Tarpenning, who served as CEO and CFO respectively during the inception of the company. The name of the company was a tribute to the famous scientist Nikola Tesla. Martin Eberhard said he wanted to build a car manufacturer that is also a technology company with its core technologies as the battery, the computer software, and the proprietary motor. Ian Wright came aboard, joining a few months later, and in 2004, they raised $7.5 million in a series of funding. The vast majority of that funding came from the current CEO, Elon Musk. It was only until 2008 that Elon Musk became the current CEO, and it was in 2009 that they manufactured their first vehicle, the Tesla Roadster. Tesla's major competition are the companies GM, Toyota, Volkswagen, and Ford. However, Tesla remains in the top portion of the electric vehicle market share globally, besides in Europe where Volkswagen recently took over as the top producer. Many new models of electric vehicles have been released by all the other companies in attempts to rival Tesla, such as Ford's Mustang Mach-E and GM's Hummer EV. Looking at the 5-year returns between Tesla and its competitors, you can see that Tesla shares have returned very superior returns against that of its top competitors, mainly after the stock market crash in 2020, where the shares initially took off. During the annual report, which was held outside the Fremont factory in California on September 22, 2020, there were 7 proposals that shareholders voted on regarding corporate activities, and it was shown that Tesla has been rapidly upping their financials, which showed a 28% increase in revenues from 2019 and a 62% increase in gross profit from the prior year. This was a very interesting annual report too, since everyone had to be socially distanced because of COVID-19, and it was done so by having people sit in Tesla vehicles as the company held their annual meeting. The annual meeting was then followed by the widely anticipated Battery Day, where Tesla went through slides showing how they're going to dramatically bring down the cost of their batteries exponentially going into 2025. They also mentioned how the last 5 years were the hottest on record, and their goal is to bring more affordable electric vehicles and energy storage, as well as building factories with less investment. CEO Elon Musk discussed about how the electric vehicle market is rapidly expanding market share, but electric vehicles aren't quite accessible yet. Tesla's plan is to cut half the cost per kilowatt hour and will do so by improving 5 aspects of production, those being cell design, cell factory production, using more efficient anode materials, using more efficient cathode materials, and reducing the size of the cell for vehicle integration. The company projects a 56% decrease in the dollar cost of kilowatt per hour and see the benefits of having vertical integration in place to increase battery ranges by 54% and 69% less investment per gigawatt per hour reduction. They also plan to release cars as cheap as $25,000 in the near future to make electric vehicles more affordable to the general population. On the topic of top management compensation, it is listed here that many stock option awards have been given to top management, and Elon Musk is the highest compensated on top management, with most of his compensation coming from Tesla stock. Analysts have been becoming very bullish on the stock, with many price targets listed in the 700 area and more recent price targets given above $1,000 per share. And many have given buy ratings at the current price. Some statements from analysts are as follows. Tesla is the global leader in the electric vehicle market with its vertically integrated manufacturing, advanced battery and advanced driver assistance system, innovation, and an unsurpassed EV footprint, wrote Mezzo analyst Vijay Rakesh in a research report beginning coverage of the stock. His target for the stock price is $775, while the shares are at $688.74 on Thursday morning. A longtime skeptic on Tesla Incorporated stock, UBS analyst Patrick Hummel has more than doubled his price target, saying the narrative is no longer about the company's leadership in electric vehicles, it's about winning in software. UBS analysts on March 3rd raised their 12-month price target on the shares of Tesla from $325 to $730 per share, saying they expect Tesla to make more money from software in coming years, and lauding Tesla's approach to batteries from insourcing production on their battery tech. And lastly, Goldman Sachs analyst Mark Delaney upgraded Tesla from neutral to buy and raised his price target from $455 to $780 per share. His Tesla thesis is if Tesla maintains its share of the electric vehicle market in the mid to high 20% range, it could reach 15 million units by 2040, or 20 million in a case of an upside scenario, Delaney theorized, as reported by CNBC. When looking at the equity and debt analysis of Tesla amongst its competitors, it is shown that Tesla has very close to investment-grade debt as well as a very high price-to-earnings ratio. This shows that people are anticipating significant growth coming in the future, which has caused the shares to trade at a very high premium relative to its competitors. Tesla does not pay a dividend, and its competitors Ford and GM have currently suspended their dividend, which gives a picture of the financial status of those companies. Tesla's beta is very high relative to its competitors, to which it accounts for the shares having more volatility. Some acquisitions Tesla has made include SolarCity, which is a solar company that has become a part of Tesla's solar business. The acquisition price was $2.1 billion and was completed on November 21st, 2016. When this was announced, Tesla said that the combination would create the world's first vertically integrated sustainable energy company, taking advantage of the synergies created by linking Tesla's solar storage with SolarCity's solar generation. Despite the merger being approved by a majority of Tesla shareholders, a number of Tesla investors later filed a lawsuit against the company. They claimed that the real motivation for the deal was to bail out SolarCity, which was beset with financial difficulties at the time. Another company Tesla acquired was Maxwell Technologies, which was an energy storage and power delivery product business. The acquisition price was $207 million and was acquired on May 16, 2019. Elon Musk has said in the past that ultracapacitors would be a breakthrough for the production of electric vehicles. He was also optimistic about Maxwell's efficient process for producing electric battery components, a process that could greatly reduce Tesla's costs of making its electric vehicles. One more company Tesla acquired was Groman Engineering, which produced automated manufacturing systems. The acquisition price was for $135.3 million and was acquired on January 3, 2017. Tesla said that the acquisition would help the electric vehicle maker improve the speed and efficiency of its manufacturing process, significantly reducing expenses. Tesla planned for Mr. Groman, who was the founder, to continue leading the operations of the acquired company, which was renamed Tesla Groman Engineering. However, months after the acquisition, Mr. Groman was ousted over a disagreement with Musk concerning the treatment of Groman's existing customers, several of which were German auto rivals to Tesla. Some recent articles that have come out on Tesla are the recent $1.5 billion purchase of Bitcoin by Tesla, as Tesla adopts Bitcoin as a direct payment for its vehicles. The payments are not whatsoever in fiat currency and are fully made through Bitcoin. Another article that has come out about Tesla is the projection of its autonomous driving feature for its vehicles. This software is still in production and has not been released to the public yet. The software uses real-time labeling of surroundings to detect where objects are, as well as to map out the roads when a person is traveling. Once this rolls out, Tesla is planning to use this software to expand its driverless taxi service, which is projected to rake in billions as many vehicles will be put out to be used for travel and will be summoned on demand for people who need to go places. It is still in the works and was supposed to be released early this year. However, Elon Musk keeps pushing back the release of this feature since the software is still not quite ready but is nearing completion. One last article is a price target release by Cathie Wood, who is the CEO of the investment management firm ARK Invest. She has given Tesla a $3,000 price target by the year 2025. She expects Tesla shares to earn about 50% per year, giving Tesla a market cap of about $3.6 trillion. This is based off Tesla's autonomous driving and robo-taxi service, which is expected to bring $160 billion in additional EBITDA. On top of this, Tesla management targets about a 50% increase in unit volume growth per year average for the foreseeable future from the company's own perspective. Tesla's capital structure is having a total amount of debt totaling $13,685,000,000 and about 948 million shares of common stock with a market cap of roughly 796 billion. Looking at growth numbers of earnings per share, dividends per share, and book value per share, the numbers show how Tesla has been up and coming for the past 5 years, with future growth projections exceeding that of its competitors. You can see how Tesla's earnings and book value have increased exponentially, while its legacy competitors have been stalling and falling behind within the industry, with some posting little and no profitability within the past 5 years. This shows how going forward much more growth is projected for Tesla, with the earnings expected to increase 35% and the book value expected to increase 52%. Dividends aren't accounted for since Tesla does not currently pay a dividend. A recent event that has affected Tesla was the shutting down of its Fremont factory last year, when the Bay Area shut down 5 counties and sent out stay-at-home orders to prevent the spread of the virus. This infuriated CEO Elon Musk, and during late April of that year, he asked workers to return to the factory, disregarding state protocol, because he wanted to make sure growth projections were not going to be stalled for the company because of this setback. The company went on to report record deliveries for the year during the Q4 earnings release in January 2021, just falling short of 500,000 deliveries and reporting numbers of 499,550 vehicles delivered. My personal analysis is very bullish for Tesla. Their stock has been on a tear since 2020, and analysts are becoming very bullish on the stock, with very high price targets in relation to where the price is currently. With the new Biden administration, green energy initiatives are looking super favorable, and Tesla is positioned perfectly to benefit from the push for cleaner energy adoption. Exponential growth has been seen in the earnings and vehicle delivery numbers, which is just another case for why Tesla is a great company with a lot of potential for superior growth in the future. The recent stock split back in 2020 has also shown there is a lot of demand for the stock, and this had the benefit of funding internal operations to increase the production capacity of the company. As well as all of this, the gigafactories that have been opening up globally will speed up the production of Tesla vehicles greatly and put them on a path to continue to rapidly expand globally. I highly suggest investors to buy the stock even at its current price, since there's so much growth ahead. I currently would buy stock in this company, and I do own stock and have been in since last year.